Hello, everyone. Welcome to Your Money Matters. I'm Angela Giroux, publisher of the Bauman Letter. And as you can see, joining me today is Clint Lee, our research analyst, and just Clint Lee. That's because today, Clint, I want to put you a little bit in the hot seat. We've seen some volatility in the markets this week. We're recording this again on a Friday. And as you've discussed in other videos, sort of your favorite tool in these volatile conditions are options. So I wanted to pick your brain a little bit. And folks, trust me, this is one brain that you want picked when it comes to options. As I've mentioned before, Clint recently launched a research service. It's called Flashpoint Fortunes. If you want more information, there's a link above. There's also one below. But he's been making recommendations since November. And in all of that time, he hasn't closed a single losing trade, 100% win rate on closed positions. It's incredible. We actually heard from a sub recently who called Clint Mr. Bullseye. You're not getting away from that one anytime soon. So Mr. Bullseye, let me ask you, what are your top 3 secrets to success with options?
Enough of the name calling already. All right. Look, I think options are a great way to invest, especially when the markets start to get a little bit more volatile. And, a big reason for that is because, your downside is capped. Your downside is capped at whatever you pay in terms of the premium to get in those options. So just as a simple example, if you bought $10,000 worth of a stock and you're willing to tolerate about $500 in losses before you get out, it's about 5% downside. Well, with markets getting more volatile, or maybe, a company reports, a bad earnings report and the stock, gaps down 10%, all of a sudden you're staring at a $1,000 loss when you'd hope to be out at 500 versus if you'd spent that $500 just on an options contract, paying options premiums, it doesn't matter how far down the stock moves. The most you can stand to lose is the $500 that you paid for that premium. So that's why we say, options are a great tool to help manage risk in the portfolio because you know how much you stand to lose, so to speak. But when it comes to, especially if you're newer to options, if you haven't traded options before, there's a couple key elements that I would highlight, just to maximize your success there. And one is just that it can be such a daunting task to come into the market and know where to begin. What stocks do you want to trade options on? And so that's the first thing I would say is to narrow your approach and kind of develop a niche, if you will. I know traders that they only trade one stock at a time, like an Apple or a Tesla. And they know everything they can know about that stock, about its product, about, major events that are coming up, important pivot levels on the charts, and they just immerse themselves in that. And I'm not saying you have to start with just following 1 or 2 stocks, but maybe narrow your focus to an industry. Look at airlines or energy stocks, or maybe it's a theme, like renewable energy. But just kind of develop a niche, narrow your focus. I think that's a great way to get started. And with Flashpoint Fortunes, what we're doing there is we're starting with a quant model. We're taking a quant model, we're applying that to a universe of just over 2,000 stocks, but that's narrowing that universe to a short list of names that have the best attributes based on that model to go on and outperform, when we're looking at buying call options. So we're honing in on, those stocks that have the best attributes to go on to outperform. And at the same time, those are the stocks that should be drawing the interest of other quant investors out there, so that buying pressure can come in and help our positions there.
And it's worked for you, Mr. Bullseye. Sorry, I'll stop now. What would you say is your second sort of secret to success?
Well, I think once you've defined your universe and where you want to focus at, simply this becomes about having a process in place for buy and sell signals for those positions. It needs to be something that's repeatable, something that's disciplined, something that you can stick to. And you can keep it simple. It can be as simple as using a moving average crossover applied to a name. Maybe you want to trade breakouts. There's a lot of people that like to focus on trading breakouts from consolidations. If you don't like buying high and you like to feel like you're getting a discount, maybe you wait for sort of the counter trend move. And I've got a couple of charts just to show examples of how those types of systems work. Let's say, for example, you've decided you want to hone in on the semiconductor industry. There's a lot of great catalysts and tailwinds going on for chip stocks right now. And one example I have is with Tower Semiconductor, ticker TSEM. This is an example of, if you wanted to maybe apply a moving average crossover system. So if we just focus on the price chart here in the top panel, there's a purple line that is an 18 period moving average, and there's a green line that's a 9 period moving average. There's a lot of moving average crossover systems out there. This is one example. It's actually pretty popular. If you just go out and Google a 4-9-18 moving average crossover, you're going to see a lot come up there. But this highlights, these arrows highlight, each time you've seen the shorter term moving average cross above the longer term moving average, and that would be simply be your buy signal. This is over the last year, and that's actually worked out quite well with TSEM in these examples. So that's more of a trend following approach. Let's say you want to be more of the mindset of buying the dip. Same thing with TSEM. We'll just keep that using that as an example. So here's another chart of TSEM once again over the last year, and I can't do a Your Money Matters video without mentioning the MACD.
I was waiting for it.
So we got the MACD, and the stochastic in the bottom panel here. And just what I'm highlighting is when you got this pullback in the stock, you had the stochastic indicator in the middle pane get oversold, kind of cross below that 20 or 30 level, and turn back higher at the same time. You had the MACD indicator kind of reset at the 0 line. And so that would have been your signal to buy the dip. So those are just two examples of how to create a process or a system to trade shorter term. With Flashpoint Fortunes, we use a technical system where we are pinpointing the arrival of the institutional dollars. We're looking for that quant money to come into these names and playing breakouts based on that. And so we've got a technical system that incorporates a variety of different factors to pinpoint that, and that's been the process that we've been using since launch.
And the nice thing about options, of course, is whether you are buying the dip or you're buying after a breakout, you only need a small move to make a nice bit of money.
Right. There's leverage sort of implied in the options contract. Typically a standard options contract is for 100 shares. And so you kind of get that leverage out of those moves. So, a 10% move in the underlying stock price can mean a lot more in terms of the gain that you experience using the options.
All right. Now, we did promise 3 of your top secrets. So what is the third?
The third is to not lose sight of what's going on in the market. With Flashpoint, when we're adding contracts, we're looking at expiration dates that are about 3 to 6 months in the future, typically. So we're concerned about the market setup, what the market's going to do over the near to intermediate term. It's easy to get caught up on just paying attention to the stock that you're in or the industry that you're focusing on, but don't lose sight of the big picture of what's happening in the market, because when the market's rising, most stocks are going to rise. When the market's falling, most stocks are going to fall. So, for me, really, there's the big 3 that I focus on in determining the market's direction over the next several months. I look at the trend, I look at breadth, and I look at sentiment. Those things kind of working together or against each other is where you can spot some big opportunities to leverage, moves higher or lower in the market in the case of using put options. The worst thing is when you have an extended trend, you have breadth, the participation in that trend is deteriorating. At the same time, you just have excessive investor bullishness. That's a recipe for disaster and for at least near-term declines in the market. But we're not really seeing that right now. If I look right now at what's happening, we've had more volatility. We've had this pullback, but we've still had some really good participation in the markets lately. And some of the things I pay attention to suggest we're now starting to get oversold. And I have a chart here just as an example of that. This is a very short-term indicator. This looks at the blue shaded area on here is the percent of stocks that are trading above a 5-day moving average. So once again, this is a very short-term metric here. But that's overlaid then against this black line, which is the S&P 500. And what you can see is that this has been very useful in kind of pinpointing, especially what I would call oversold conditions. And so once this metric starts to get below sort of that 30% to 20% level, it's marked some key turning points in terms of just identifying that the market's trend downward is set to reverse. That's where you can see that in late January with the green circle I've put on here. We got oversold on this indicator. You can see the S&P had a nice bounce after that. Well, we got sort of the same thing going on here again, where we've had a big pullback in this metric. This looks like a good spot to if I'm looking to add new positions, this is a nice spot in terms of the backdrop of the overall market to do so.
All right. Well, I hope everyone was taking notes because, again, you have just been absolutely crushing it with Flashpoint Fortunes. On Wednesday, you sold your 13th winning trade. Those were call options on HP, 68% in a little over 4 weeks. I'm going to toot your horn a little bit here. And that was after you grabbed more than 50% in profits on half of, is it Zynga?
Zynga, yep.
Zynga. Oh, that's a fun name. On Friday. 2 weeks before that, you locked in a 250% gain on First Majestic call options. And actually, one subscriber said he made an unbelievable 360% in profits on that recommendation. So great job there, Clint. I know people are happy. And again, folks, if you want more information on how to access this research, please click the link below. Clint, thank you so much, and I will see you next week.
Thank you.